So today, we are on a short week. We didn't had yesterday, as you as you guys can see, the volatility dropped a lot from here to here. So it was quite intriguing, because the market wasn't moving anywhere. But right when New York opened a few minutes after, we had this big drop on euro dollar, right? We're gonna dig into those in a minute, but for now, what I want to do is I want to go through and do a run over of the economic calendar, and after we finish that, we come back here, we analyze the opportunities based on the economic calendar, and we go forward. All right, but I would like to say something already. We've reached 103 subscribers on the Telegram. Let me join here to show you guys. 103 subscribers. That's really, really awesome. All right, so I want to thanks everyone that have been there, have sharing the links, the link with your friends and so on. There is a surprise that, as I've been mentioning already, since long time ago, and I was just waiting. I was patiently waiting as a good trader. I was patiently waiting for that 100 subscribers to reach, because that was my goal until first quarter of this year, and we reached it. So pretty happy. Now, what's the surprise? Well, I will reveal the surprise on Friday. All right, so I will send the surprise. What's the surprise on the Telegram? I know, sorry, I know that I think everyone is in there, right? If you're not in there, so let me know and I will send the link through here. But I think you guys will like, what is this? Second of all, I hope everyone had a good Christmas. Sorry, good Christmas, good Easter, good Easter. I'm full of chocolates. All right, so here's my chocolates. I'm full of chocolates, and I don't want to see chocolates in front of my face anymore for a couple of days. All right, so let's get into it before it gets too late. All right, let me. Oh, there we go here. This week. Okay, so is it this? Yeah, that's correct time. As you guys can see, Easter on majority of the G10 group, except for Japan. What else? Holiday on German, Italy, US, and a few others. All right. Now, what we had on Monday, it doesn't matter much because we did had all the big industrial capex. I've done. I'm not sleepy. I don't know what's happening. Every time I join here the webinar, I get like this. I don't know why. But anyways, I've done a blog already talking about these events. If you feel like you wanna have a look at it, just come to ACY website, go to market analysis, go to Lucas Santos, and it's not here yet. Interesting. It's not here yet. It should be up soon. But anyways, let's go to Tuesday. What we had already. Well, let me share the screen twice like this. Is this gonna work? Oopsie. Let's do it one more time. Hi, Sam. How you doing? Okay, now it's working. Okay, so as you guys can see from here at 1 a.m. in the morning, we had this very bearish candle on the euro dollar. And it's pretty much because of this Bullish candle here at 1 a.m. and midnight 1 a.m. on the US dollar, all right, on the US dollar index. It's not because of euro is weaker. As well, we're going to have lots and lots of news for Europe today. We just had one at 6 p.m. right now, the Spanish unemployment change that came much better than expected. It came at negative 33.4 thousand. The previous was negative 7.5, and the consensus was at 10,000 unemployed with people on the change. But in actually it came negative, so that's pretty good. That's not bad because sort of negative people got unemployed. In terms of um, in, in terms of change between 1 month to another. Now, um, we did have the manufacturing PMI that was a bit lower than what was expected, but the big thing here was between the Atlanta Fed GDP. Now, okay, this was the big take at 5 a.m., but at 1 a.m. we had as well the ISM manufacturing PMI and the manufacturing prices that was higher than expected, leading the US dollar to be stronger for a few hours. If I show you here, so 3 hours, yeah, a few hours, 3 hours here being the um, strongest currency. Sorry, guys, I don't know what's happening. Strongest currency on the market, and it did drag down the euro dollar, the New Zealand dollar, as you guys can see, Australian dollar. What else? Gold as well. We did have quite a little bit, not much, all right, but we did had a big not a big drop compared to euro dollar, let's say. Even some of the brokers that I was looking at the pricing, they had a very big gap. All right. I don't think ACY had it, but it doesn't matter if he has or not. But anyways, let's go back now. So what else we gonna have? We had at 5 p.m. we have nationwide HPI from UK, and we're gonna have, I think, one of the most important one for today, okay, is the German CPI. All right, oopsie, sorry, is the German CPI. So, okay, now it's better. Is the German CPI. Why? Because the month over month is expected to come higher than expected, but the year over year is expected to come lower. Sorry, month over month is expected to come higher than the last month, and the year over year is expected to come lower than last year. All right, last year we had 2.5%. I've explained this already for you guys, how to read, let's say, year over year and then the month, but pretty much is from what says here, please move this window away from the shared application. What is happening here? Let me see. Are you guys? Oh, you guys can't see it, right? Oh no. Let me share again because there we go. Okay, now you can see this, right? You can see both. Thanks, Lawrence. I I I didn't know. Did someone typed it here? Please share this. That was cool. I liked it. Anyways, so as I was saying, this will be the biggest news for today, all right? The German CPI. Because it's pretty interesting, the numbers here. We had 0.4% the previous, and now we're expecting a little bit of increase on the month of a month, the March, all right, last month, inflation for Europe, for German. In my honest opinion, I do think that will be a tick up on inflation on Europe, all right? Not only on German, but on Europe as well. Remember, I've mentioned this already, okay? If you guys just stop and think for a bit. All right, let's have a class here. Europe map. All right, come here. Let's go. Very good one. Say here, let's say we can see here. We sort of can, but that's all right. Okay, so this is the whole Europe nation, right? We got Russia, we got Finland, we got Sweden, we got Norway, we got Denmark, Estonia, Latvia, Belarus, Ukraine, Moldova, Romania, Hungary, Germany, France, Spain, and Portugal, United Kingdom, Ireland, and everywhere. Of course, Russia is the biggest here, as you guys can see, right? But this guy here is the biggest producer of manufacturing, all right? And as well, energy. All right. So if, of course, Russia is the biggest one, but I'm saying Russia provides energy to everyone here. All right. Everyone here. If they cut the as we had on 2022 going to 2023, November to December 2022, we had a outage on the Russia gas supply to German, right? Because then from German it goes to all the countries. Okay, so it comes from Russia, goes to German, and then from German it goes to let me grab a pen. It goes to all the small and bigger countries. Okay, what did that happen? Well, that happened because of the Ukraine war and so on. All right, some tensions were happening on that time. Um, the big thing we can take here is, of course, Europe is very, very how can I say dependent, all right, of Russia. Russia is the big boy here, and nothing will change that. But what I want to say is German is a big producer, therefore they may have um, a higher CPI month over month. Okay. After that, we're gonna have the Europe CPI as well. All right, just here, Europe CPI on Wednesday, write it tomorrow. If we have a higher German CPI, most probably that we're gonna have a higher core and CPI, pretty much CPI and core CPI for Europe. All right. So just pay attention on that, guys, because that can change the euro dollar perspective. All right. We're gonna go there in a minute, but I just want to make sure to mention this right now. We are seeing already some breathing from euro dollar on the 1 hour chart there. Now, moving to Wednesday, we will have the JOLTS. We will have FOMC member William and Master and Gali speaking. They're going to have those speeches, and it's very important. Some of them we do have access, but most of those ones we don't have access. All right, so don't even worry to try to search on YouTube or anywhere else. All right. If you have a Bloomberg terminal, then you most probably have it. Okay. ADP non-farm employment change, that's going to be a big take here. 149 to be expected from 140. Okay. Remember, this Friday we're going to have NFP. Okay. As it's the first Friday of the month. But this is the ADP already. Okay. So what I'm looking, okay, what I'm saying, it's it goes. I think it goes pretty the same as what the big banks and big institutions and biggest analysts are saying. I'm waiting for some cool down on US economy, and this is where and when my word will prove to be true or not, if I can say that. Why? Because if you remember last year, 2023, since June, July, I've been mentioning about um, a weaker US dollar after the first quarter. Okay, after this first quarter, we would have some weakening on the US dollar. The data wouldn't be so favorable for the USA, and so on. So this is what pretty much I'm expecting from this Friday. I think the NFP will come a little bit lower than what expected. And if it comes a little bit lower than what expected, uh, this will be a big change on market structure. Okay, because the market have been like, okay, it's still very good data coming from US. We're still having some good data coming from Europe as well, but in a sense of not for the currency, but yes, for the economy, because I've mentioned this multiple times. Um, we've how can I say that? Because a lower CPI, it's not good for the currency, but it's good for the economy. Okay, so when you have lower CPIs, that as we can see here, 2.5% on year over year for Europe. I'm talking about Europe here. This is what the market is expecting, but this won't lead the euro to go up. It will, yes, lead the euro to go down. Because the market don't want lower inflation, the market wants high inflation. And what is the one that is having high inflation at the moment is the US. Sticky inflation. They have been with high inflation since the beginning of this year, right? They haven't had anything below expected. If we look to, um, let's say FinLogix here, just a second. And they've been mentioning these, and I've been mentioning this already as well. Let me just a second. USA, it's the start of the year. April, March, February, January, all the way to today. Low, median, high. Okay. All right. Let's see. Inflation. All right. Higher than expected. On this is for December. All right. December was higher than expected. Year over year, month over month, and the core inflation as well. All right. Let's go down to February now. Core inflation here for January, higher than expected, higher than expected, higher than expected, higher than expected. Let's go for March now. March. Uh, there we go. Core inflation. And the inflation rate month of month came as expected, but higher than the previous. Month over month higher, year over year higher, and rate year over year higher as well. And now we're gonna have the um the Fed coming into the market and say, well, we don't care about inflation. Isn't that stupid? Because they've been talking about inflation, and bringing inflation down as well with a high unemployment, as well as not destroying the labor market. And it feels like they're not caring to this anymore, in a sense of, well, it just doesn't make any sense anymore to us to be looking at these, as the market is expecting to us to cut the rates on June. Now, the tricky part is I don't think they will cut rates on June anymore. I don't think so. I'm gonna drink a sip of water, and I wanna listen to you guys. I wanna hear you guys. Do you think the Fed will actually cut the rates on June? or you think they're gonna play around and say, well, this, and that? I want to hear your opinion. I'm gonna give my one as well. No one has an opinion. That's interesting. Okay. So no, I think Fed Reserve will keep rates on hold. The probability is low. July seems to be the time. Hold. Yes, I think they're going to play with. Yes, yes, correct. Okay, let me show you something. If we go to, I've mentioned about these two arrays, CME, Fed Watch 2. If you go here, I'm going to share the link again. If you go to this website and look, nothing is 100% in the world, all right? Nothing. Even JP Morgan can't promise returns on a monthly base. But let's have a look on here. And these two basically show us meeting by meeting what the market is expecting of the Fed to the Fed to what the Fed will do. All right. So May, of course, we are on 525, 550. Nothing changes. 95% of the market is expecting no changes. 12th of June, go. Oh, it's not loading. Okay. 12th of June is expecting 56% of the market is expecting a cut. Guys, a week ago it was 64. Remember, I've showed these last week. It was 64. I'm not joking. It was 64 right here. The market is paying attention right now. And you know, who's the worst? Who's the worst? How is that? How they say that? Oh, the worst blind is the one that don't want to see. The one that don't want to see in a sense of, would you like to see? Would you like to see the word? No, I don't want to see. I want to stay blind. This is the worst, right? And the fact that right here, and it's changing little by little. It doesn't matter if it change 10% week by week. We're gonna become in June, and nothing will happen. Another thing here is the Fed Watch 2. It's not related to Fed. It's related to the market. All right. So the market is expecting these, but it doesn't matter if the market expects that other stuff. All right. Okay. So what I've been looking at it, and it just seems to me that inflation is too sticky. Too sticky. All right. I was just showed to you guys, inflation have been higher every month, higher than expected every month, sorry. And nothing have been revised down. So when you have a higher inflation and high unemployment rates as well, um, there is no one more blind than those that don't want to see. That's the one. That's what I want. Thanks, Rainer. So, as I was just saying, so inflation gets sticky, unemployment gets high, right? High unemployment rate. NFP gets revised every time down, and this is not helping, right? This is not helping. So, in my opinion, most probably they will be playing with us on June. Okay, it will become to June, they won't cut, and they will be on hold again. And maybe they have one cut this year. Maybe. It's so interesting to see from January. All right. If we come back to January, some people were expecting 150 base points cut. That's like 10 consecutive meetings of cutting 25 base points. Now they're expecting only three. And from three, they will go for two, and from two, they will go to one, and through one, I think they will stop there. I think that there will be one cut at least this year. Or I don't think we have more than two, to be honest. Anyway, so coming back here on Thursday, we're gonna have Powell speaking as well. So are they wanting to hold the yen to ransom? You mean the Bank of Japan, Rainer? Anyway, so we're gonna have the Powell speaking as well. We're gonna have retail sales from Australia, and then the big boy comes into play again. All right, US here with initial jobless claims, exports and imports. Okay. On Friday, did I mention this is? Oh yeah, this is Thursday. On Friday, we will have, well, the biggest news, of course, will be Atlanta Fed GDP now again, and unemployment rate. Remember, this is to be so. It's so. It's I can't say these words, but it's so stupid, so stupid. What the market it's doing at the moment, all right? 3.9% unemployment rate for March. That means no change of unemployment. I don't think so. I don't think so. I think it will continue to have high unemployment rate until mid of this year. And the NFP, the actual NFP, is expected to come lower already from last year. All right, it's expected to come, sorry, last month. Expectations are 275,000, and sorry, previous was 275,000. Expectations are at 205,000. So 70,000 less people working from a month to another month. So when you think about that, that's quite a big to have no changes on unemployment rate, right? That doesn't make any sense if you know what I mean. Right. So lower NFP, high unemployment rate. All right, high unemployment rate. And then on Saturday we don't have anything, just CFTC commissions, commodity futures trading commissions, releasing the COT, the COT. Right, let's go to the charts now and see what are we having in there. Someone sent a question. So I didn't got your question, Rainer. Are they waiting to hold the yen to ransom? What does ransom means? I don't know what does that means. Let me check. Ransom meaning a consideration paid or demanded for the release of someone. Oh, okay. I got what it means. Um, let's yen it's a little bit tricky. We will want Japan to move first. Yeah. Japan did move first already, as those Swiss SNB, Swiss National Bank, moved first from the Fed already. But I will get into that question, but let's go through those things first here. All right, first of all, let's talk about the US dollar. We had this massive push up here. Let me put in the 4 hour. We've just broke the top. All right. And it just feels to me that the US dollar is unstoppable. All right. The US dollar is unstoppable. It has been breaking tops and tops, making lower lows. And it just seems to me that this will continue to somewhere around this level here. Let me grab my box here. Okay. If we don't get to there, maybe before Friday, then I would say the NFP may come a little bit higher or unemployment rate come a little bit lower. But I stay firm on my foot, and most likely that's what I've said. It's what's going to happen in my opinion. Now, US dollar, there is a potential for a continuation to the uptrend. Just as because, we've broke these, oopsie, we've broke these highs. Maybe a little pullback to somewhere around here, or even here, a deeper pullback and a continuation to uptrend, right? Now, if we looked at the Dutch, the TTF gas, that's the Dutch gas. We've had a big drop on that, right, from oopsie all the way from 30 to 22, but it came back high. When it's going back up, this is not good for euro, right? It's good for euro when it's going down because it's energy price. When energy price is going, oh, that's something. Let me do something here. Um, Let me put these on the start of February, not March, sorry. March, just here, and another one at the end of March. There you go. So we did had higher energy prices by 7% up. So 7% up on energy prices on Europe. So that means that it may come higher than expected, the inflation, because of the higher energy prices. And remember what Lagarde have said, as energy prices go down, we will continue to have lower inflation. I'm just assuming the opposite are here. I'm just being a trader and speculating it. Energy prices, Dutch gas went up. That means most probably we will have a higher CPI. Maybe yes, maybe not. I don't know. Let's see. Let's watch it. Now, the other thing I want to mention is the WTY oil. It's just rocketing. All right. It's been big moves happening on that. I wasn't sure where it would go, but feels like that it's going up. And with that, we are having the CAD, taking over the scenario, as because Canada is a big producer and exporter of oil, right? Therefore, in the balance sheet of Canada, they have trades between countries of oil, and the countries paying them on higher prices are good for them, and they have huge reserves. Okay, now coming back to oil. Okay, so sorry, let me drink a little bit of water here. Now, just finishing up with oil, pretty unpredictable where it could go, right? Because I'm not sure what's driving oil prices at the moment, to be quite frank with you. It could be some tensions in the Middle East, of course, it could. It could be some, you know, I would say higher demand at the moment for industries and cargo ships and so on, but it doesn't seems to be the reasoning why it's going so crazily up at the moment. Now talking about gold, ooh la la. Well, that's 4 hours. Let's go 1 hour. Ooh la la. What did I say? Hmm. Well, I've mentioned it that this would be our first target, right? This would be our first target. We did have this back, and then we would go up again, and this is my target. At the moment, gold is doing pretty well, and then we will continue to do. All right. So if you haven't been here last Thursday, I highly recommend you to watch the replay of the webinar on the ACY Securities YouTube channel. Okay, but just run through here pretty quick. We did have this box. All right, the market came in, touched to that. We've drawn the expansion Fibonacci all the way to the top, all the way to the bottom here. Come back to the retracement. I think this retracement was very large, but it's still a retracement, and broke the top, have came back, retested, and now going up to the 2,284. Let's call this 2,290, okay? Because it's very close to a round number 84. It could be 85 if you prefer, but I would go for 2,290. And after that, 2,230, maybe a pullback, okay? Because as is a round number there. And round number always have effect into the market, okay? Now, looking ahead, I am expecting a little bit more. How do I attend the Thursday webinar and what time? The Thursday webinar, how do you attend that is exactly the same way as you would to attend this one. You just go to the ACY website on here. Let me show you. Let me just show you here. ACY. And then you go same thing on learn, and then market webinars and seminars, and then you just wait to load. Some people have problem with this page, but just wait it to load, okay, guys? It's pretty congestion sometimes here on the website, so sometimes it gets a little bit of time to load. But if it doesn't load, then you send a message to me here. So can you see this one is today, 2nd of April. Duncan has one tomorrow, 3rd of April. But here is my one, 4th of April on Thursday. Okay, macro week wrap up. So just register now, put your first name, last name, email, and your phone number, and then reserve your spot. All right. What else? Yeah, so just talking here about gold, I think gold will continue to go up, in my opinion, because of the clearly a very clear confusion on the market. All right, people are gathering places to put their money. Investors are gathering places to put their money for a safer asset, I would say. And gold become those standards as always have been a safe haven, right? So in my opinion, gold will go and continue to go to 2,300, 2,400, 2,500 for this year. All right. I was listening to some analysts talking about a pullback on gold and so on. I don't think that would maybe. It can, but I don't think that may be, but not a $500 pullback as some of them are expecting. I think this is too much. Come back below the 2000s and going all the way to 1,700, 1,800. I think this is too much to gold, all right, to handle. I don't think that will happen. And so I'm pretty bullish on gold at the moment, still. Now, talking about USD JPY, nearly reached there again. How many points are these? Less than one, right? That's 23 mile points. That's like micro 2 points. This is pretty much nothing. So I'm just waiting for these 152 level to get breakthrough, because the market is quite undecided to see if the board will do some intervention in the monetary policy. Answering your question now, Rainer, answering your question now. All right. Sorry, guys. Answering your question now, Rainer. If we break through this 152 level, I think there is plenty of room to run to the 155. Primarily, I see US dollar stronger than the Japanese yen, right? I don't think they want to see Japan moving first. I don't think they want to see, let's say, Bank of Japan cutting rates, because they won't cut rates anymore, right? They've just came from a negative policy. the NIRP, negative interest rates policy, to a ZIRP, to a zero interest rates policy. So what does that mean? From negative 0.10% interest, they went to 0% interest. So this is very good because this is attracting investors into the currency at the moment, but it's still 0%. So yielding aspect, it's not good. Japanese yen, still very bad currency, still a very weaker currency compared to euro, US dollar, Canadian dollar, what else? Even Australian dollar. Okay, so except CHF because CHF cuts the rates, so that's a different take in that. All right, but coming back here to USD JPY, I think Bank of Japan will continue to maintain a sort of neutral hawkish instance, just so the market don't think that we'll hike again or something like that out of nowhere. And it happens what it just happened on last year. Let me show you here. All right, like these things here. This is good for Japanese yen because it shows a strength towards the US dollar. That's the biggest currency, one of the biggest currencies in the world, the fiat currencies. But it's still not the best case scenario. Okay, if they would hike, no, I don't think so. Okay, so my opinion is that USD JPY will break through this sort of consolidation it's building up here and do sort of similar to this move. I think the big you know when you got a bomb and it's ready to explode, you just need to put fire on here, right? And then the fire will come, and then it comes to close here, and then you're running. And then when it touches here, it goes to inside or the chemical reaction and explodes. So pretty much this is what it's happening right now on USD JPY. The market and the participants of the market is waiting for the Fed. Waiting for the data from USA, waiting. It's going to come this week and it's going to boom. All right. So this is what I'm expecting. This is my expectations for USD JPY this week. Let me take this drawing off. Now, pound US dollar. Well, it just reached my target. Just reached my target as we expected the last couple of weeks. 125, 500. Okay. Now, what can we continue to expect from pound dollar, right? So from GBP USD. If we look down here, we are on the very last stop. All right. We are on the very last stop. So let's draw like a moving average from here. All right, so this is pretty much how it's working at the moment. But if we zoom out, this is a 1 hour chart. If we zoom out to 1 day, we are on a consolidation. Okay, like it's pretty simple to see this here. We are on a consolidation on the top of a trend. Oh, sorry, on the mid of a trend. Most probably we will have some bullish aspect from now on, but just as a pullback. All right, nothing too huge. If we look at here, we just had this break. All right, maybe it can go a little bit lower. All right, maybe it can go a little bit lower, like here. It's building up another consolidation and come back higher. Where's my pen? There we go. All right, come back to some of those levels and then continue to go down. Okay. So this is my take on GBP USD. Do I have any targets below that? No, I don't have any targets below that. But most probably on Thursday I will, because I will dig some some information to us, but it doesn't look like we have anywhere to go from here, right? It feels like a free fall if it continues to actually fall even more than 1.24, 1.25. That's gonna be crazy because we haven't been there since December last year. Okay. Now, moving back to euro dollar. Someone sent me a question. What's the question? Maybe pullback happens in June if Fed doesn't hike. Oh, if Fed doesn't cut. You mean on gold, right? Yeah, maybe. 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 I I think gold is much more than only cuts and not cuts this year. I think investors are seeking a safe asset, safe place to leave their money in, um, on this war. Let's say, you have some of them cutting, some of them saying that they won't cut this year, some of them with sticky inflation. The market, let's say it's a supermarket. You have different prices, different everything. It just doesn't seem to be the place at the moment to leave your money laying around and not putting somewhere that that you know not for sure, but it's a good place to leave your money. All right. So this is what I'm expecting, um for so sorry for the market. All right. This is what I'm expecting because of gold. Um Now, let's go euro dollar. Let's go euro dollar. Okay. So I still have the euro dollar draw here, but it's pretty simple what it's happening, right? It's a pretty big downtrend. Euro inflation declining. I think we will have a push up this week. All right. In my opinion, I think euro dollar we will realize some gains and it will have some push up somewhere those levels here. All right. Because if we get Fibonacci 2 from there all the way to down here, we most probably will get somewhere around the 50, 38, 61, right? Around this area here. I think the price as magnet will push to 108 again, and it will stay for that for this week. So pretty bullish for euro dollar this week. All right, pretty bullish for euro dollar this week. But remember, if we having, as I'm expecting, a lower NFP, a lower high unemployment rate. This is pretty bad for US. Higher inflation for Europe. This is what I'm predicting. This is good for Europe. Okay. I think this is all from me today, guys. We've covered all the commodities. We've covered the major pairs. Do you guys have any questions regarding anything? Always possibilities for the market to change trends out of nowhere. But with the scenario right now, I think if it gets to there, it will be very, very slowly going there, right? Nothing like these to the upside. All right? I'm not expecting these to the upside, like a sort of this move here to the upside. Not expecting these. Maybe because having um higher unemployment rate, lower NFP, and higher CPI on UK, maybe that happens. Yes, maybe. But in my opinion, I'm bearish on GBP USD. Okay, in a sense of, a pullback and then coming back down. Could NFP resume change the market sentiment before the rate cut? Could the NFP resume change? Yes, yes, that's the whole thing. That's what I'm expecting to. That's exactly the point. Like sticky inflation, higher unemployment rate, why they would cut on this scenario? They can't, you know. So this is exactly why I'm expecting it to influence. If you feel the Fed will cut rate once or twice, how many base points do you think? I think the Fed can cut somewhere around like 50 to 75 base points cut this year, 2023. So 2024. Really enjoyed. Awesome. Thanks, Beto. I see you on Thursday then, man. Not a problem, sweets. All right, guys. So I'm gonna stay here. And hopefully everyone have a lovely week ahead. And if you have any questions, you know where to find me. Beto, if you want to join our Telegram, I will leave the link right here. Oopsie, not this one. I will leave the link right here into the what's the name? The chat. So you can. Oh, you're on the Telegram. Awesome. Not a problem then. All right, guys. Where do we find you if we have questions? On you can put down in the comments of the YouTube video, and I will answer to you. All right, guys. Take care, and I see you on Thursday. Bye bye.